Hey everybody, welcome to the live stream. Midday, we decided that this time would be optimal yesterday, so here we are. It is 2 o'clock Eastern time. I'm going to wait a few minutes, let everybody pile on in. We're going to break down the SPY, the Qs, the diamonds. I'm going to share my largest position with you guys and talk about the 65% move gain that I saw in this stock basically overnight. Nearly all of it happened overnight. I want to break that down for you, kind of show you the ins and outs, talk about what happened. It was a pretty wild afternoon, pretty wild after hours trading session, and then this morning watching the options chain light up and trying to figure out how I want to manage the position and where I'm going to go moving forward. There is an unfortunate piece to this story or side to this story that I want to share with you as well. It's going to show you the power and the limits of some different option strategies. So I'm going to share that strategy with you. I'm going to talk about how it's limited, how it's limiting me now, and we'll dive into a bunch of other stuff. Also, I'm hoping everybody brings a friend, brings a buddy to the live stream. I want to double up so that we get tons of tickers and tons of ideas. Yesterday, we had a bunch of stuff come up in the live stream in the chat. I got a couple of names, couple of tickers from the community. I actually put a trade on one of those. It was a stock called Revolve, RVLV. We're going to break that down today. I'm going to talk about why I liked it, why I decided to ultimately put on a trade, and we'll go from there. So let's see if we've got anyone in. All right, let's, once you arrive to the live stream, say hello in the chat. All right, if you're here, say hello. Just let me know you're here. I'm curious to know who's in the chat. I encourage questions. I want everyone in this live stream to ask a question or just say hello or share a ticker, anything. Just want to get a lot of involvement, and that way we can share some trade ideas and kind of move forward. So anyone that's here right now, I'm glad you're here. Throw something in the chat, say hello. Let's get started. So we're looking at the SPY today, and we were looking like we were just grinding higher. And then all of a sudden, I think about 9:30, we had a big pullback in the markets. You can see this tail right here if we look at the SPY. Joshua Jackson. Hello, Joshua. Welcome to the live stream. Thanks for saying hello. Glad you're back. We're breaking down the SPY here. We're talking about how we had a slight push up this morning, and then around 9:30, we got this big sell-off. And I was just going to check the news to see if anything else is coming out. But it looks like, yeah, S&P futures fell 50 points over the last 40 minutes. Let's see. And they're saying not seeing a definitive reason for the sell-off. Earlier headline warning about the coronavirus cases outside of China might have done it. I'm not getting a good feel for why things sort of tipped and dumped all of a sudden around 9, maybe 9:15 or so. So if anybody's heard any news or knows, let me know. I'm curious to know what that sell-off was about, but everything sold off. All my positions sagged, and now everything's kind of coming back again. So that may have been an opportunity to get long your favorite stock or add to a position that you really like. That's the SPY. That's the spiders right now. Now, if we flip over to the Qs and take a look at the NASDAQ, same thing. You have that long wick on the bottom side of today's candle, just indicating that we dropped pretty hard, and now we're being bought back up. So right now, looking pretty similar to the SPY. And then if I flip over to the diamonds, same thing. Sagged, pulled back up, and now we're being bought back up and heading higher. So really same across the board. No all-time highs that we're seeing today. So yeah, just kind of hanging tight. Still hanging really high. Not a real genuine pullback, just maybe some fear over the coronavirus. I'm not entirely sure what that big sell-off was, but it happened in the 9 o'clock hour Mountain Time. Let's see. According to Goldman Sachs, market vastly underestimating damage to the supply chain. Merck's having issues if Merck isn't shifting in the supply chain. Okay, thank you, Joshua. I appreciate that. As I promised, I do want to talk about my largest position, and this is a really funny story. Zillow. So I was talking about Zillow yesterday, and just, will it be a delayed hit to everyone that gets products? Okay, thanks, Joshua. So with Zillow, yesterday we were talking about it, and I mentioned that they had earnings after hours, and that this was sort of like the big day for me in my positions. Zillow is my largest position, and the position had been up and had been slowly kind of grinding higher. And I had cleared my not my break even point, but my actual entry point where I bought the stock. So I entered here. That's my average price per share. But then because of all the options premium that I've collected in selling covered calls, I've reduced it from 44.25 down to this 36.74. So that's my true break even. 44.25 is my entry point. And you can see we've been getting some bounces along this area. And then we kind of rolled uphill, and then they had a gorgeous beat. Their numbers were phenomenal. I was super excited about it. They're still not profitable overall as a company, but they're expanding and growing and bringing in larger and larger revenue every quarter. And we got this massive, massive pop. So from my entry point to the highs of today was a gain of 65% in my position, which absolutely blew me away. Now, I heard somebody talking about short float. So the float is basically how many shares are available to traders. When people talk about the short float, they're talking about how many shares of the overall pool of shares is being short sold, meaning wanting the market to go down, selling shares high and then wanting to buy them back lower, short selling. Now, Zillow had a 24% of the float was short prior to earnings. So what that means is there were a bunch of people shorting it, hoping it would go lower. And when the good numbers came out and it blew upward, all those short sellers have what they call a stop loss or a pain point where they're going to close their position and accept the loss. Well, the way that you close a short position is by buying the shares back. So when you buy them back, that's just like someone else coming in and buying shares. It pushes the price higher. So if you blow through enough short selling stop losses, you're getting a lot of buying that's happening. They call this a short squeeze. And I could put an article in the description from Investopedia that talks about what a short squeeze is. But what it is a blowing of stop losses that's so frequent and violent, it's almost like a snowball effect, and it can create a very violent push to the upside. Some people have said that the same thing has happened in Tesla. If I just look at Tesla's chart, a lot of people think that this and this was a result of people that were shorting the market. They were short on Tesla, and their stop losses got blown. It kept going higher. People were piling in, and you had a massive short squeeze up to $968. So they think that's what happened with Tesla. I heard some people talking about that with Zillow because what happened was it gapped up massively after hours, and then this morning when it opened, it absolutely went ballistic and went as high as 66.68, and I think that could be attributed to a ton of short selling. Now, the way to know this is after the close today, maybe tomorrow morning I'll check it, but in my TD Ameritrade account that's linked to my Thinkorswim platform, I'm going to log in and re-look at Zillow and look at its short float percentage. If that percentage is way, way smaller, then I have a feeling that this was a massive short squeeze. So very exciting. This was a big move, and I do want to share with you. So here's the painful part. My break even is my entry point is 44.25, but my covered call strike is $45. So what does that mean? That means I'm about $17, $18, $19 in the money. It means that all this profit isn't yet mine until I roll the strike up over time. So I have to continue to massage this trade. I could get called. My shares could get called away from me. And in that case, I would still make a profit because my strike is 75 cents higher than where I entered. And ultimately, my break even is at 36.74. So from there to $45, that's all profit for me. So we'll see if I get called away. I don't think I will because I've injected a lot of extrinsic value. And if you remember from the other day, extrinsic value is just time that I've injected into the options contract. That just means I've pushed the expiration date out months and months and months. So This was my big position. Anybody else trade Zillow? Anyone else in the chat want to talk about Zillow? Anything else going on with thoughts about the short squeeze? Did you have any shares? Did you sell any shares? Anybody get involved with Zillow today or last night? If you did, I want to hear about it. Just put something in the chat. Let me know. Let me know what your thoughts are. Another one to look at today is Luckin Coffee, because Luckin Coffee is one that, as you guys all know, I have a couple short puts on this thing. I'm waiting for expiration. I do have some long shares of the covered call. The premium's been super juicy. The IV, the implied volatility rank, has been hanging in the 40s, so it's been decent. And I did some rolling of positions today, collected a few credits, moved a few things around, moved my covered call from a 36.50 strike up to $38, and I'll show that to you in here. Let's see. Yeah, so I was at 36.50, and I rolled from there up to this position tab, which is right at $38. So that's my covered call strike that I have currently on Luckin Coffee, and I still have my $35 short put that I sold. It's naked, and just wait to see what's happening. I kind of want to go to expiration. I'm liking Luckin Coffee. I'm liking the premium. So if I happen to get put shares, meaning if the stock goes below my strike and I get assigned those shares after expiration, I'm actually okay with that at 35. So that's why I'm not closing out the position early. I'm going to hold and wait and just hold tight on that for now. But that's Luckin Coffee. My MDB had a big pushback when we had that sell-off. I mean, look at this tail. Look how far sold, pushed all the way down to 170, and now is back at 177.50. So just a crazy move that happened over the 9 o'clock hour here in Mountain Time. So continuing to watch this one. Hey, 515 Stangs, welcome to the live stream. What do I think about buying puts on STMP? Let's take a look at that. STMP. Oh, wow. That's an interesting. Yeah, if you're extremely bearish on this, you can do that. I guess the other thing to consider on this, it doesn't have as much upside, but if you trade options and you're familiar with buying puts, you could also go ahead and buy a put spread. I mean, you could buy a call spread. Apologize for that, because volatility, I'm guessing, is low. So volatility percentile is back down to 19%. Did they just have? Let's see. They just had earnings. Wow, they did. Wow, they killed earnings. You know, if me personally, I don't just buy puts or just buy calls. I only sell premium, or if I'm going to do something like bet on this to go down, in a low volatility environment, I would buy a call spread on this, where you're limiting your potential profits because you've got a window to hit, but you're not paying as much up front. So let's take a look at this. Let's see. Let's just go 43 days out on this, and let's say you buy. Oh, that's interesting. So I can't even put a position on in here. It's at 150. So the options chain isn't even registering. Wow, that move was so violent at 515 Stangs that there's nothing available. That's absolutely incredible. I guess unless you just bought. Okay, so let's say you wanted to buy this $140 put. It's going to cost you maybe $650 per share, so $650 for a one lot. And let's see what else you could do. And what you could do if too bad that this thing is messed up. If you wanted to go ahead and buy what they call a debit spread, a call debit spread, is where you're looking for the stock to move down, but you're sort of asking for that stock to move down to a certain amount. So you set it up to where you buy I just got to be able to show this to you. I tell you what, I will explain this a little bit once we get another. Yeah, this thing is just not working well here. Yeah, I will, when we get an options chain that's looking good, or when this calms down, 515 Stangs, I will explain what debit spreads are in low implied volatility environments. But let me just look at a couple things real quick. Yeah, so if you wanted to, let's see. Just going to think through this for a second here. Give me 1 second. Let me look at a regular, let me look at just like Tesla or something real quick, so I can kind of explain this. Okay. So what I did, so I misspoke on that and I apologize. So, okay, so seeing a normal options chain where you have white, yellow, yellow, white, this is at the money. You want to have one of your legs of this spread be out of the money, so that's why it was acting weird with STMP. But pretend like this is STMP for a second. So what you can do here is you can come in, if you are in a low volatility environment, you don't want to sell premium because premium prices are down. So what you could possibly do if you're betting on the stock to go down is you could buy a put that's at the money or just in the money, like say right here, and then you would go ahead and you would sell an out of the money put somewhere lower. So let's see if we can set this up. So we're going to buy, we're basically going to buy a vertical here, and what that's going to do is we bought, wait, let me make sure that was in the money here. Okay. So we're going to buy this guy right here. We're going to buy a vertical. And what that's going to do is if we buy the 895 vertical and then we sell something out of the money. So in this case, if you just went ahead and you bought a put to go down, on Tesla right now, it would cost you about $9,500, right, for a one lot. Now let's say you buy a credit spread. So 895, you sell, you buy this put, and then you're going to sell an out of the money put. So let's go 85, 75. Let's just pick like 860, okay? So I'll put 860 in here, and we'll do one contract. All right, so 895 and 860, you were going to pay $9,500 to buy a put on Tesla or STMP or whatever to go down. But if you instead purchase a debit spread, then what that means is you're buying your put like you wanted to do, but then you're also selling an out of the money put as well, so that you're basically limiting your profit, but you're also making the contract less expensive, so less capital intensive. So instead of paying $9,500 to have infinite upside on this position, you could pay down here, if you look, $1,875, so $1,800 for the possibility of collecting a $35 move. So if you look at your stock and say, what's this stock normally move in a couple of months' time? If you think, you can kind of gauge how far that's going to move, and say it's, $50. So you could sell this $895, and then you could come out to go maybe $840, and you got that. So it's going to cost you $2,800 to put this trade on instead of $9,500, and then you are limiting yourself. But it's not like selling a put on Tesla. It's not like Tesla's going to go to zero. It's not like STMP is going to go to zero. So it's going to move within an expected range. So what you can do with basically buying a debit spread in a low implied volatility environment is you can pay much less for the trade, but collect gain on the more realistic move of the range from 895 to 840. Now in STMP, when the options chain clears up, I'll explain that a little better, but purchasing a debit spread in low implied volatility environment gives you the cheapest option for purchasing it. But if you want to make it more or make it less expensive and be less capital intensive for your account, you can buy your put, but then also sell an out of the money put so that it's less expensive because you're buying and selling, so they're going to offset each other somewhat. So I hope that kind of made sense. I apologize, I kind of bumbled through that for a minute. Go back to STMP here. Yeah, it still hasn't cleared up. So we'll have to look at this at some point when it's showing a real. Yeah, that move was so violent it just messed up the options chain for a little bit. But it'll settle down probably by the overnight. Hey, Guy Roderas, how are you? Let's see, Joshua. In your opinion, some large short positions placed this morning on all companies that have already warned they won't meet quarter two. Apple, Merck, and over quarter two will be rough. Yeah, we'll have to wait and see. We'll have to see what happens. When does Apple report, Joshua? Oh, they just did. Yeah, they just had earnings. So yeah, they just had an earnings beat, and they won't report again until 4/28. So yeah, we'll have to see what happens and what goes on there. 515 Stangs. Hope that explained a little bit about what's going on. I know that was kind of a wild explanation, but go to tastytrade.com, Google search Tasty Trade, and buying a debit spread. And that will give you some video content on how those work and how to put them on. Guy Roderas, do you have any tickers, anything going on that you want to talk about? Oh, I need to talk about Revolve, RVLV. And was it, I want to say it's Prakesh, I think was in the live stream yesterday. He was the one that recommended this. But this is Revolve. This stock is trading around $20 or was yesterday. And I went ahead and I created a synthetic stock options position on this. And what I mean by that is I sold a naked put. And a naked put is just saying that I don't think the price of the stock is going to go below a certain dollar amount by a certain expiration date. So on the put side over here, if I said I don't think it's going to go below $17.50 by March 20th, then I could collect between $1.05 and $1.25, somewhere in the middle, per share, and keep that as my premium credit and then wait and see how it plays out. But when you sell a naked put right in the money, this first line right here, just inside the money, you're basically creating what they call a synthetic stock position, which is you could get assigned at that level, and this is kind of a nice way to begin the process of acquiring stock is selling a put, you don't own it yet. Now if this stock drops, I can roll my options position from $22.50 down to $20. And then over a certain amount of time I could roll it down to $17.50. And I can keep rolling down if I want, or get to a point where maybe I roll once or twice and then I just let myself get assigned the shares because it went below my strike. Then once I get those shares, I come over here and I immediately sell a covered call on the shares that I now have. So it's kind of the wheel, but it's adding that third component of starting with synthetic stock at $22.50. So I have the $22.50 strike. I collected $526 on a one lot, and now I'm waiting to see what's going to happen. If we drop lower, in a few weeks I'll roll this position from $22.50 down to $20, and then I'll sit tight and see what happens. If I get a big move away and I can just close the position and take the profit, I'll do that. But if we have to roll down a few times and I decide I kind of like this price level, I might take the shares, get assigned, and then turn around and wheel and sell that covered call and just keep doing that. When you get juicy premium in a low price stock in a company that you think is doing something interesting or is making some money, Revolve is profitable, so that's a good sign, and they don't have any debt, so I like that. You could quickly own this stock for nothing. You know, a few whacks at $4 and $5 premium per share, you could easily be to $10 really quickly as far as your cost basis that's been averaged down. So that is Revolve, and the option right now, they have fewer options. So right now we've got the one day and the 29 day, and then the 120 day. So we're going to wait on this one, let this one play out and see where we go. But for right now, I like that position. And the chart looks really nice just because it's been really beat up since its IPO. It's just traveled way down, bottomed out, and now it kind of looks like it's starting to give a little bit of life and a little push to the upside. My hope is that we hit earnings and we get a nice move, a nice momentum play to the upside, and then we'll see where we go from there. So let's check out the chat. Let's see what's going on here. You're busy rolling positions that expire tomorrow. So far, so good. AMD short call position from November has been causing me some grief. You have a short, oh, you got a short call on AMD. Let's check that out. Yeah, I bet that is giving you trouble. Hey, Krish Patel, you're here. We just talked about RVLV. All right, I got a review for Krish real quick. RVLV, I got to thank you, Krish. This was a fantastic play, and I went ahead and put this on yesterday. I put on the synthetic stock position. I went March 20th. I sold a naked put at $22.50, collected $5.26. So did a one lot for $526, 30 days out, and now I'm just going to sit and wait and see what happens. I'll either roll and defend the position a little bit or take assignment and then wheel into covered calls. So I just want to thank Krish for that one. That was a great trade that I'm going to be watching very, very closely. Back to AMD, Guy has a call. So Guy, on your AMD short call position, are you do you have a call spread or are you a naked on this one? And if so, what's your strike? You're right though, it has been pushing up. That's dangerous. Just curious to know what your AMD short, what your strike is, and we'll take a look at it real quick. I haven't looked at the implied volatility on this one. So it's 66, so it actually looks really good. Yeah, premium is pretty good in this one. It's just up so much. That's tough. Sold some short puts along the way. Are those puts naked, Guy, or were they put spreads? And what are your strikes? I'd like to know. I'd like to kind of look at these. Spreads. Okay. Well, at least you've got your risk defined. So Guy just said he has a put spread on, which basically means that he's capping his losses at some point. They're harder to roll. I'm guessing that's been your experience, Guy. You're probably stuck. You can't move the put spread very much because you're dragging along the dead weight of that bot call or that bot call. So they're call spreads. So okay, so you've got puts and calls. Are they call spreads and put spreads? You've got them both working? So if you've got call spreads on, you're probably in the money, and it's hard to roll that spread out in time or even up because you got that dead weight of that bot call that you have attached to that spread. But let's keep hunting around here. Facebook sold off a little bit. Trying to think if there's anything else going on that I wanted to show you guys. The Zillow was the big thing. This just was my monster, and now it's really pulling back. That's really interesting. My biggest position had a massive pop, so very, very interesting. Keys had that same dip in the 9 o'clock hour Mountain Time and has continued to be bought back up. So that's a good sign. I didn't know what, still don't know what caused that, but it was significant. Can't answer my last question because of the sensor. Huh. I'm not sure what that means, guy. A huge delay in the chat. Yeah, I'm still working on that, guy. I'm not sure why there's such a huge delay in the chat. I don't understand that. If anybody knows how to fix a delay in a chat, let me know. I gotta figure this out because I hate that I did that to you yesterday too. All right. I've also got my Etsy position. It had a massive move up at the 9 o'clock hour, pushed it back down, and now it's just kind of hanging out there. So not a lot going on there. Oh yeah, Target. I've been waiting for Target to come alive. It's kind of been just a dead beast. Oh, it's actually, that's like the happiest I've been with Target in a long time, 118.03. I have a put spread in here, and it's been a bit of a dog, and I've been trying to get out of it. But I need Target to move up another buck. I need it to get up over 119. So let's see what we get out of that. And that's really all I've got going on. I don't really have anything else to show you guys. Wayfair's having a small baby day to the upside. And that's really it. ACB was up earlier. It's still up. My speculative play there. So that's kind of funny to see. Ford is having a slight up day. But yeah, that's kind of my biggest things are watching Luckin and then just looking at the Zillow, the monster 65% move to the upside on Zillow. So we got to see what happens there. And then I'm just going to be watching RVLV. I'm really wanting to see this thing break out and move higher. And you know, if we get out of the money and I get a close or an expiration and don't get assigned shares, great. If I do get assigned shares, great. I'll just wheel it into a covered call. But this was a really good play, and I think the IV's come down. Yeah, so the IV was 100 yesterday. Now it's 78. The IV percentile. Oh, no. So sorry. Implied volatility is up even more today. Sorry, 101.45. We just lost a day of premium. But they're definitely a lot lower than yesterday for me, which is interesting. I sold for 526, and now it looks like you might be lucky if you get 395 right in there. So we'll have to see what plays out there. But Zillow up huge. RVLV is having a little baby up day, so that's great. We had the dip earlier. I don't know what caused that sell-off in the markets, but everything seems to be responding and moving back in the upward direction. You can see all the long tails. They're getting even longer now. Let's check the Qs one time. Qs is getting a longer tail, and then we'll look at the diamonds, the Dow Jones. Yep, everything's kind of pulling back up now. We had the big sell-off, and now we're buying things back up. So people are rushing back to the market. They continue to buy. So we'll keep a close eye on things. Anybody else got any questions? Sorry, today wasn't as active. We don't have as many people in the chat today, and so I think it's kind of limiting a little bit of our interaction. We're not getting any tickers. We talked about AMD. Anyone else in the chat want to look at any other tickers or talk about any other issues in the markets? We can do that now. But I've kind of showed you all my positions. Just did mainly some rolling. I moved some Wayfair puts around. I moved a Wayfair call. Just rolling for some credits, moving some things around. More management today than anything. It's been a great week, even though it's been kind of strange, kind of weird for some reason. With Monday being off, that was just kind of threw a kink in the week. It felt kind of weird. But 4-day trading week, it's been great. Profits are good this week, collecting a lot of premium, and just kind of watching the markets to see if we were going to be volatile or not. On the VIX, wow. So the VIX, you can see this, we just popped up to 1722 today, and now we've been sagging back down. So for those of you who don't know what the VIX is, this is a volatility indicator. It's a chart that basically tracks fear in the market. You can see back here, on this day, which would have been August 5th, you could have probably sold premium in anything, because when fear is high, options premium gets high. So you want pushes to the upside in volatility so that you can sell premium. You can see down here, from here right around 10:15 until about Thanksgiving. This was a very, very sort of slow and boring time for option sellers. We need these little spikes so that we can get a little bit of volatility, a little bit of fear in the market, so that premiums get larger, so we can jump in and sell more and more premium. And with this spike today, I imagine that's where I was able to get some of my premium, and now we're kind of sagging back down. So things are calming down. We'll probably calm into the close, and then we'll work our way into Friday and see what we get tomorrow. All right, Guy wants me to take a look at KMX for a bearish call spread. You're in it. KMX for a bearish call spread. Now, okay, let's do this. So you sold a call spread in KMX. KMX, CarMax Inc. Very interesting. I'll have to look at this one. So you sold a call spread. Now, first thing, what am I going to do, Guy? The first thing I'm going to do is I'm going to open my trade tab. I'm going to go to the bottom, and I'm going to look at volatility. Current IV percentile. This is the IV implied volatility rank. It's volatility measured against itself over the previous year, and it's about 35%. So this is a little low for what I like, but it's better than being in the 20s. So the absolute cutoff, according to Tasty Trade, the way they trade is below 30, they avoid it. So at least it's 35. Even though I might not like it, it's still acceptable to be selling some premium here. So good job on that. I want to see, so Guy, if you can tell me, what is your expiration date and what's your spread strikes? What are your two strikes? I like what you're doing. We're at all-time highs, and I think all-time highs. Yeah, it looks like all-time highs, and having a big push up and having a sell-off now. So yeah, let's see. 100. So you've got 100, and what expiration date, Guy? Premium's not horrible in these. If we go 43 days out, let's see. Yeah, you could sell something out of the money. I usually like to get at least 1%. So if you're looking at a $92 strike, I want to at least get 92 cents. And we're able to get more than that, even one standard deviation out at 91.05, we're able to still get that. $8 expected move by this time, which would put it right around $94. So here's the expected move. So yeah, this looks really good. I don't see any problem with this, Guy. You know, you've got implied volatility on your side, so you sold it. How much credit did you collect on this trade? And did you do a one lot premium collected? I'm guessing you went either 30 to 45 days out. Hopefully you're collecting, it's typically good to collect 1/3 the width of the strike. So if your spread is $5 wide, they want you to collect about $1.66. All right, so you $100 strike in March. All right, so Guy, did you stick with the monthlies? You've got 4 different March selections. If you stuck with the monthly at 29 days, 100. Oh, so you went really tight then. Well, obviously it's 102. So you probably collected 205 in premium, 37 deltas. Yeah. Yeah, if you're bearish on that, that's the right environment for it. So selling a call spread there would be great, because then maybe you'll get a movement down to the downside. And one thing I like on the downside or the upside is MACD pushed up, so you got an expansion to the upside, and then at the same time the RSI completed its journey to the end of the channel all the way to 70. It dropped but then came back up. So now you've got hopefully some room to move back to the bottom on both of these indicators. Not that these indicators make all decisions, but they just kind of help guide us, give us an idea for where the stock is relative to everything else. So that's great. So 102, and then their earnings are coming up on 4.2. So kind of in the middle there, waiting on a binary event to come up. So right now, yeah, that sounds good, and hopefully you collected pretty good premium on it. Let's see. I had on my watch list, somebody asked about CAT yesterday, and I wanted to double check this one just to show off the implied volatility and talk about it just a little bit. Let's see, 37, also kind of low. Thought it'd be maybe a little better than that, but if you go 43 days out, you can still get some decent premium at 20 delta. It's okay. And then the chart is also sort of down, so that's good. But you are seeing a little swelling to the upside and a movement back to the middle of the channel. So I'd probably want to see this down again, another dip down before I took it, and an increase in volatility first. Yeah, Guy, you're totally right. Let's see, I don't think I had anything else. You guys gave me the AMC, decided not to play that. Luckin and RVLV though, I think if you're looking for any kind of good play, RVLV is just, this was super exciting to find. And we've got a binary event coming up here in earnings, so we'll see what happens on Feb 25th, and we'll kind of go from there. But yeah, anybody have any questions? If not, I think we're going to wrap things up, and hopefully I answered some of your questions. Just wanted to share a little bit about my trades. The big move in Zillow was absolutely incredible, so pretty excited about that. We'll see where that goes from here. I'll continue to share more on that position as the options chain settles down after that violent move, and we will also go back at some point and we will look at not CarMax. Let's see, what ticker was it that had the big move? Let's see. Let me find that real quick. We had AMD we were talking about. Guy said KMX. I think it was 515 Stangs. Oh, STMP. Yeah. We'll go back to STMP tomorrow on stamps.com. Jeez, look at that. And just see where we are in terms of the options chain. Because right now, it's not calming down. Things are completely out of whack because it was such a violent move. That is a massive move. So whoever was involved in that, that was fun. Hope you enjoy that one. All right. Hope everybody had a green day. Have a great evening. Let me know if this time works. I thought we'd get more people in here today. We kind of set it up yesterday. I was thinking the 12 to 1 o'clock hour Mountain